Hey, welcome to The Explainer. Today, we're going to tackle a really exciting topic, momentum trading. It's a strategy that's all about speed, strength, and getting in on the action. To really get it, we're going to walk through a real-world scenario, step by step, to see how one piece of news can light a fire under a stock and create a massive opportunity. Ready? Let's dive in.
So this quote, it's pretty much the core philosophy of momentum trading right here. This isn't about digging for hidden gems that might be valuable someday. Nope. It's about finding something that's already moving and moving fast and making a bet that it's going to keep going. It's almost like a law of physics for the market. An object in motion tends to stay in motion.
So, what kicks all this off? What gets that ball rolling? Well, it almost always starts with a spark. Some kind of big event, a catalyst, that completely changes the game for a company. And that is exactly where our story begins today. Okay, picture this. You wake up, grab your coffee, and this is the headline you see. The market isn't even open yet, but this news is spreading like wildfire. It's a huge, unexpected piece of good news, and suddenly, thousands of traders are all asking the exact same question. Okay, what happens now?
And this is what happens now. The second that opening bell rings, the stock doesn't just climb, it gaps up. It literally leaps 10% higher than where it closed yesterday. This isn't a slow walk up the stairs. It's an explosion, powered by all the buy orders that flooded in overnight. This is the first, undeniable sign of incredible strength.
But here's where it gets really interesting. That price jump is only half the picture. The other half is the trading volume. It's 5 times higher than a normal day. See, that is the confirmation. A price move without much volume can just be noise. But a move with this much volume, that tells you the big players, the institutions, are paying serious attention.
And that brings us to our first key term, a volume surge. That 5x number we just saw is a perfect example. It's a giant flashing sign that this isn't just a handful of small investors getting excited. It means the big money, pension funds, hedge funds, they're likely jumping in. And that's the kind of fuel that can keep a trend going.
All right, so we've got the events, we've got the market's instant reaction. Now, let's switch gears and get inside the head of a momentum trader. What are they thinking as they see all this unfolding on their screens? They're basically running down a mental checklist. Is there price acceleration? You bet, that 10% gap up. Is there a fresh catalyst? Absolutely, the drug breakthrough is perfect. A sudden jump in demand? Well, that's what the gap tells us. And strong volume to confirm it all? Check. 5 times normal. Our scenario is a textbook example.
And here's a really crucial difference in mindset. Momentum traders are not bargain hunters. They are not waiting for the price to dip so they can get it on sale. They are actively looking to buy things that are already strong with the belief that strength attracts more strength. They're trying to jump on a train that's already left the station and is picking up speed.
Okay, let's zoom in even closer. Because those first few minutes, even the first hour after the market opens, it's absolutely critical. A momentum trader is glued to the chart, looking for very specific clues that this initial explosion of interest isn't just a flash in the pan. So the first big test is, does the price immediately collapse? Do all those early buyers just take their quick profits and run? In our story, it doesn't. The stock hangs tough, staying right up there near its opening high. That's a huge clue that the buyers are confident and they think there's more upside to come. And that move, holding above the open and pushing into new highs for the day, that is a classic breakout. The stock has broken through a key level, and because it's happening with that massive volume we saw, it's a powerful signal that the path of least resistance is higher. And as the morning goes on, you start to see another beautiful sign. Anytime the stock price tries to dip even a little bit, bam! A fresh wave of buying just rushes in and pushes it right back up. We call these shallow pullbacks, and it's like watching buyers say, oh no you don't, we're in control here. So the signals are all flashing green, we've got the catalyst, the volume, the breakout, and now we're seeing buyers prove they're in control. This is the moment where analysis stops and action begins, and this part is all about execution and discipline.
You know, a smart trader always has their exit plan figured out before they even click buy. On the left, you see the good stuff, our entry signals. A high-volume continuation candle, for example, is just a strong green bar showing the price is still charging ahead with lots of traders involved. But on the right, those are the warning signs. If volume starts drying up, the excitement is fading. If it breaks below a key price level, sellers might be taking over. These are the clues that tell you the party might be winding down.
So our trader sees one of those shallow dips get bought up instantly, and that's their signal. They're in. And the goal now isn't to perfectly time the top. That's impossible. The goal is simply to ride this wave of positive momentum for as long as it lasts, managing the trade based on what the price and volume are telling them, not on fear or greed. And honestly, this is often the hardest part of trading. The fast-moving price, the dollar signs, it can really mess with your head. Discipline means sticking to your plan. You trust the signals that got you into the trade, and you have to respect the signals that tell you when it's time to get out, even if you're tempted to just hold on for a little more. We've just walked through one really exciting, dramatic trade from start to finish. But the real goal for any serious trader isn't just one lucky win, right? It's about turning that drama into a process, a system that you can use over and over again. So let's pull back and lay out the steps we just saw. So here it is, the playbook. Step 1, identify the catalyst. For us, that was the drug breakthrough. Step 2, confirm the strength. That was our huge volume surge. Step 3, find a clear entry signal, like the breakout or the shallow pullback. Step 4, ride the trend with a clear plan. And step 5, which is maybe the most important, exit when the signals tell you the momentum is fading. So when you boil it all down, the big takeaway is this. Momentum trading isn't about randomly gambling on hot stocks. It's a structured system for taking all that excitement and chaos in the market and turning it into a methodical, managed opportunity. So that's our look at how momentum trading works in the real world. We've seen how a catalyst, volume, and price action can all come together to create a really powerful trend. The next time you see a stock making headlines with a huge move, you'll know exactly what's happening under the surface. You'll know what to look for. So the only question left is, where will you see momentum next?